Welcome to Smart Money Moves. In today's video, we'll show you how to start investing with little money in 2024. We know that investing might seem overwhelming, especially if you're new to the game or don't have a lot of capital. But the truth is, you don't need a fortune to start. With the right strategies and tools, you can begin building wealth even with small amounts of money. Whether you're saving for retirement, a home, or just want to grow your wealth, this video will give you actionable tips to make your money work for you. Ready? Let's dive in. Let's start with some basic investment concepts. When you invest, you're putting your money into assets with the goal of making it grow over time. The most common types of investments include stocks. When you buy a stock, you're purchasing a small ownership share in a company. This means you could earn money as the company grows, either through dividends, a portion of the company's profits, or by selling your shares at a higher price. Bonds. Bonds are loans you give to corporations or governments in exchange for regular interest payments. Bonds are usually considered lower risk than stocks because you're lending money with a fixed interest rate, but the returns are typically lower. Mutual funds. These are pools of money from multiple investors that are used to buy a diversified mix of stocks, bonds, or other securities. Mutual funds are managed by professionals, which can make them a good choice for beginner investors. Each of these options has its own risk and reward balance, and understanding them will help you make better investment decisions that align with your financial goals. So, why should you invest? There are several compelling reasons to start investing as soon as possible. Wealth growth. By investing, you allow your money to grow over time, often at a rate much higher than traditional savings accounts. The average stock market return is about 7 to 10% annually. Over time, this can significantly increase your wealth through the power of compound interest, where your earnings generate their own earnings. Combat inflation. Inflation erodes the purchasing power of your money over time. If you're just saving in a regular bank account with a low interest rate, inflation can eat away at your savings. For example, if inflation averages 3% per year and your savings only earn 1% interest, you're losing money. Investing, however, has the potential to outpace inflation, preserving and growing your purchasing power. Generate passive income. Through investments like dividend-paying stocks or interest from bonds, you can generate passive income, money that works for you without you having to actively work for it. Over time, this income can grow and provide financial security or even fund your retirement. Achieve your financial goals. Whether you're saving for retirement, buying a home, or putting money away for a child's education, investing can help you reach those goals faster. By starting early and investing consistently, even small contributions can grow significantly over the long term. Let's take an example. If you invest $100 a month at a 7% return, in 20 years, you could have over $50,000 just from small monthly contributions. Now, let's look at some low-risk investment options, perfect for beginners or those with a limited budget. High-yield savings accounts. These accounts offer a higher interest rate than a traditional savings account, making them a safe option for short-term savings. Your money remains easily accessible, and you can earn a modest return while keeping your principal protected. These accounts are great for building an emergency fund while still earning more than in a basic savings account. Robo-advisors. These are automated platforms that manage your investments for you, based on your risk tolerance and financial goals. With services like Betterment or Wealthfront, you can start investing with as little as $500, and the platform automatically adjusts your portfolio to keep it balanced. Robo-advisors use algorithms to minimize fees and provide optimized portfolios. Exchange-traded funds, ETFs. ETFs allow you to buy a basket of stocks or bonds, offering instant diversification. Many ETFs track major indexes like the S&P 500, which represents the largest companies in the U.S. You can start buying ETFs with a small amount of money, and they're traded just like stocks, which makes them flexible and easy to access. Micro-investing apps. For those who want to start with very little money, micro-investing apps like Acorns or Stash allow you to invest spare change from your daily purchases. For example, if you spend $3.50 on coffee, these apps round it up to $4 and invest the extra 50 cents for you. Over time, These small amounts can add up and help you build an investment portfolio without even noticing. Let's explore some simple, automated investment strategies that can help you get started without the need for constant management. Acorns. This app makes investing automatic by rounding up your everyday purchases and investing the spare change. It's a great way to start investing without having to think too much about it. Imagine you buy lunch for $7.60. The app will round that up to $8 and invest the extra 40 cents. Over time, these small investments add up and allow you to build a portfolio with minimal effort. Acorns also offers a variety of portfolio options based on your risk tolerance. Stash. Unlike Acorns, Stash allows you to pick specific stocks and ETFs based on your preferences. If you're passionate about certain companies or industries, you can choose to invest in them directly. Stash also provides educational content to help beginners learn the ins and outs of investing, and you can start with as little as $5. Index funds. One of the simplest and most effective strategies for long-term growth is investing in index funds. These funds track a specific index, like the S&P 500, and give you exposure to a broad range of companies. They're low-cost, diversified, and don't require you to pick individual stocks. Index funds are recommended by many financial experts, including Warren Buffett, as a smart strategy for beginners and seasoned investors alike. Building a sustainable investment habit is key to long-term success. Here are some tips to help you stay on track. Start small and stay consistent. The most important part of investing is to get started, even if it's with a small amount. Consistency is key. Regular contributions, no matter how small, can make a big difference over time. Automate your investments to make this process seamless. Set clear financial goals, whether it's saving for a house, your children's education, or retirement. Setting clear financial goals can motivate you to stick to your investment plan. Write them down and track your progress regularly. Educate yourself. The more you understand about investing, the more confident you'll become in your decisions. Take time to read about market trends, investment strategies, and financial news. You don't need to be an expert, but a little knowledge can go a long way. Remember, investing is a journey, and the key is to start small, stay consistent, and remain patient. If you found this video helpful, be sure to subscribe, like, and share it with others who might benefit. Your support helps us create more content to guide you on your financial journey. Thanks for watching, and we'll see you in the next video.